And it's 1:30 a.m. p.m. right here in Lagos, Nigeria. Thank you for joining us right here on Business Incorporated. Coming up on the show, Zambia's inflation rate fell to a 4-month low in June on lower food prices and is set to decline further when the impact of a recent rally in the Kwacha seeps through. Survey shows South Africa's consumer confidence fell further in the second quarter of 2023. And oil prices fall today, paring some of the previous day's gains as investors take profit and concerns of further interest rate hikes. Welcome. Let's take a look at how the markets are looking on the African continent. Most of the markets we track are closed right now, but in South Africa, we see the GSC index, that's still open right here on the African continent. And we see it's in positive territory with the GSC looking pretty good right there, 0.33%. On the flip side now, for intraday, it's down about 0.33%. But remember, the NGX did close at the last trading day, 1.30%. That was the last close, looking very good there for Nigeria. Let's look at the other parts we track right there. We see the Egypt is that's closed, but the big move up, 2.18%, looking pretty good right now. Let's move on now and see what's happening in Europe. Now we see for Europe, the EU leaders are meeting today for a 2-day summit. And after a failed mutiny in Russia last weekend, security will be a major topic. Joining me now is Chip Ponda-Chimbelu in Berlin. Great to have you, Chip. So what's top on the agenda today?
Well, it is that failed mutiny in Russia and what it means for security in Europe that will be discussed definitely at the top of the meeting when they meet. But while it has shown that there may be cracks in Putin's power structures, there are fears that the Russian leader could become more aggressive to assert himself. NATO Secretary General Jens Stoltenberg has also warned that Russia should not be underestimated after the failed mutiny. Stoltenberg will also be discussing the ongoing war in Ukraine with the EU leaders, and the EU leaders will also be looking at how much support they can continue giving Ukraine. And the economy, migration, and external relations will also be on the agenda, with a particular focus on EU-China relations, and that will be, of course, a major topic when it comes to the bloc's foreign policy.
You did mention, China. How can we expect Brussels to proceed with Beijing going forward?
Now, that is a question for which there are different answers within the EU. We've been hearing talk of a China strategy in recent years, but there's no concrete plan on how to proceed on relations with Beijing. Brussels sees China as an economic partner, but since March 2019, it has also referred to China as a systemic rival. And it looks like little is set to change there. That's because the EU's 27 members have very different interests and priorities. For instance, China is Germany's biggest trade partner, and as an export-oriented economy, China plays a very different role in the German economy than, say, it does in the Dutch or Spanish economies. Now, experts say that Beijing is aware of these differences, and so it doesn't engage in negotiations with the bloc, but focuses on dealing with EU member states one-on-one. So Brussels is trying to focus on reducing the risk that doing business in China poses for Europe. Decoupling has been mentioned as a means of reducing dependence on Chinese suppliers.
All right, what can we expect from markets today?
No big gains or losses are expected from the European markets today. Traders will be taking in the hawkish comments from central bankers who met this week in Sintra, Portugal. They agree that the global economy has been resilient enough for them to continue raising interest rates. And in terms of economic news, Sweden's Riksbank is announcing an interest rate decision. Consumer price indexes are also coming in for Germany and Spain, and we'll also have some figures on UK mortgage approvals and Swedish consumer confidence.
All right, that was Chiponda Chibelu giving us details right there from Berlin. Thank you so much, Chip. Let's take a look at what's happening in Asia now. We see Asia Pacific shares closed mixed Thursday, lackluster trade as investors continue to pass comments from Federal Reserve Chair Jerome Powell, who indicated there could be multiple rate hikes ahead. We see that the Nikkei down, close up 0.12%, but Kospi index 2,550 for the all-share index, down 0.55%. HSI is down big today, 1.24%. That was the close. Other markets we track in Asia are also in the red there. Shanghai Composite down 0.22%, 3,182 points, while the ASX in Australia marginally closed 0.03% at 7,194 points. Moving straight on to the U.S. now, stock futures ticked higher, boosted by technology and bank names. The market approached the end of the second quarter and the first half. And we see it's green across the board there for the U.S. Futures, wondering if it's going to close that way today. The Dow Jones Industrial Average, that's up 0.23%. And the S&P futures, that's also up 0.23%. And the NASDAQ futures, tech-heavy NASDAQ, 15,174 points, up 0.30%. All eyes on central bankers right now. That's what investors are gauging. Now let's get a sense of what's happening, what the U.S. Fed is saying right there with all the central bankers in focus right now. Our correspondent Mary Bird brings us more.
United States Federal Reserve Chairman Jerome Powell was one of the featured speakers at the European Central Bank Conference in Portugal on Wednesday. He stated that the U.S. cannot expect to see that interest rate hikes might not increase over the coming months, despite the fact that June's meeting noted that it would not increase interest rates for the month of June. But inflation continues to be high in the U.S. and could be impacting the global markets. This is why Chairman Powell stated that he could see interest rate hikes in the next few months, and they could increase in the coming months until the end of 2023. This has had many global economists hoping that this will level out inflation and the tightening of the markets, as the job markets have not been heavily impacted by this tightening of the economic policy. Chairman Powell noted that the U.S. inflation rate must come down, as it will also impact the global economy if it continues to rise at an unexpected rate.
As our correspondent Maria Bird, they giving us details from what the U.S. Fed Chair Jerome Powell said yesterday. Let's take a look at what's happening in all markets now. See, oil prices fell today, pairing some of the previous day's gains as investors took profits on concerns of further interest rate hikes, dampening economic growth and global fuel demand. While weak economic data in China, that's also weighing on sentiment. Brent crude futures declined by 12 cents to $73.91 a barrel. US WTI intermediate crude there slipped 2 cents to $69.54 a barrel. Both benchmarks climbed about 3% yesterday after the U.S. Energy Information Administration said crude inventories dropped by 9.6 million barrels in the week ended June 23rd, far exceeding the 1.8 million barrels draw analysts had forecast in a Reuters poll. And gold prices lingered near a mid-March low today, dragged down by a stronger dollar and hawkish comments from U.S. Federal Reserve Chair Jerome Powell. We see spot gold fell by 0.1% to $1,906 per ounce, near a mid-March low hit on Wednesday. U.S. gold futures that fell 0.4% to $1,914.60. The dollar index was higher, making gold expensive for holders of other currencies. Powell's hawkish remarks reinforced interest rates going higher for longer, with a higher opportunity cost of holding gold. That's dimming the appeal of gold. And Botswana's Minister of International Relations, Dr. Lemagang Kwepe, it says all member states of the Southern Africa Customs Union have now ratified the agreement establishing the African Continental Free Trade Area. Leaders of the region are currently meeting in Swatini for the 8th summit with the theme, Circle-Industrialization Opportunities through Improving Economic Complexity. The African Continental Free Trade, a single continent-wide market that unifies 54 countries, aims to help scale Africa's business through the integration of regional value chains and increasing intra-Africa trade by 52.3% by 2030. Our South Africa correspondent, Innocent Somoza, reports.
Well, according to the World Economic Forum, small and medium-sized enterprises are the lifeblood of Africa's economies. SMEs contribute about 80% of Africa's employment and 50% of gross domestic products. However, they often face many challenges, such as weak currency, crippling economy, and funding, to name a few. What efforts has the government made to enhance the capacity and skills of SMMEs, particularly in terms of innovation, technology adoption, and digitalization? We took it to the streets of Gaborone to find out firsthand the challenges facing entrepreneurs.
Yes, the government does help. They do. There is LEA, Local Enterprise Agency. You just bring your idea and then they approve. If they do, they fund you. So there are enterprises that help you start down.
Some of the challenges we're facing as business is that we don't have a place to trade. This place belongs to council. At times, when they want to utilize the place, we can't trade. Meanwhile, the Minister of International Relations, Lemagang Kwepe, says the government of Botswana is taking steps to improve the ease of doing business for SMMEs in Botswana.
One is the program called YDF, which is Youth Development Fund, which gives seed capital for young people to start small businesses, because we want them to be innovative in the space and also to enterprise, because government only hires just over 100,000, and the private sector is the major employer. So we need to promote businesses of young people. We also have CEDA, which is a Citizen Entrepreneurial Development Agency.
Botswana has a long-standing partnership with the De Beers. The partnership has contributed significantly to Botswana's economy, growth and development, making it one of the world's leading diamond producers. It is alleged that Botswana president insists on a bigger share of diamonds from De Beers venture. Minister of Minerals and Energy, Lefoko Moari, took the time to speak on the partnership, which is set to expire this Friday.
All are fully aware of what it means to Botswana, what it means to De Beers, what it means to the diamond industry. So we believe that we will gravitate towards something that will be a shared win, if not a win-win for all of us.
Strengthening institutional capacity at both the continental and national levels is crucial for the effective implementation of the African Continental Free Trade Area. However, realizing this has been a challenging task due to various factors. One of the main challenges is the limited resources and technical expertise available within many institutions. From Gaborone, Botswana, Innocent Simos, Channel Television News.
Welcome back. Well, the World Bank says due to high inflation, richer Nigerians have lost more purchasing power than poorer households. Washington-based financial institution disclosed this in its June edition of Nigeria Development Update Report. Joining me now is Charlie Robertson, head of macro strategy, Firm Partners, joining me via Zoom. Great to have you on the show.
Thank you very much for having me. It's a pleasure to be here again.
Fantastic. So what do you make of this World Bank report? Saying, because normally poor households seem to be worse hit, you know, with inflation and all these reforms we're seeing as incomes are already squeezed. How do you see this report by the World Bank?
Well, to be fair, it's the poor which matters more to institutions like the IMF and the World Bank. They they will be still concerned that with high inflation, people don't have the means to protect themselves when the currency weakens. They don't tend to have a stock of dollars. They don't have any pricing power for wages because you've got 5 million Nigerians entering the labour market every year. So what space do you have to go and demand more pay? It's really tough. So, the report's looking at all segments of society here, but I still think the IMF and World Bank will be saying there needs to be mitigation. There needs to be some support for the poorest, a redirection of that money that was spent on the fuel subsidy towards those hit hard.
And looking at, the way the economy is run here, do you think the poor will actually get, some kind of support, with all these reforms we're seeing? Do you see that happening?
There's been a lot of preparation already from the World Bank side. They've been talking about this for well over a year, that when the fuel subsidy goes, there needs to be directed support. And the World Bank is prepared to step in and do something along those lines. So, yes, I think there'll be help. Will it? I don't know how it'll feel on the ground. I think a lot of people are going to be struggling right now. But there should be support coming, yes.
It is quite tough, having to buy fuel, paying over 100% for fuel right now. It is really, really tough on the ground right here. But let's look at the debt profile now with 49.85 trillion naira debt stock right now. What are you seeing for Nigeria's debt servicing obligations with the reforms we're seeing?
The reforms have been absolutely vital. So my concern was that Nigeria was heading on the road to default. And I think what Tinubu's done is he's done a kind of a handbrake turn. You just don't see changes quite that dramatic very often. It's very, very impressive because with 100% of revenues, federal revenues, going on interest payments, everything the federal government had was going on interest payments, and the government was borrowing more all the time. And there was this unaffordable fuel subsidy. It was going to crack. And if it had cracked, my concern was the Naira, we wouldn't be talking about 700 or 800 to the dollar. In a few years' time, we'd be talking about 3,000 to the dollar. That's what a default would have taken us down that road. So he's done a dramatic change there, and not spending the money on the fuel subsidy. That helps to improve the debt metrics. That improves Nigeria's credit rating outlook. The whole story just gets so much better. And the weaker currency, of course, then means more money from oil, more Naira anyway, from selling oil, which gives the government, again, this boost, which is much, much needed.
And talking about oil, looking at the oil market now, there seems to be some kind of downtrend, at this time. If this continues, how does that impact, us making more dollars, in that oil market, going forward?
But this is why having a flexible currency that can weaken when the oil price goes down and then strengthen when it goes up again, that's why this is such a big deal. Angola's just done the same thing. They've just weakened their currency significantly in the last 2 months. And I think that reflects the weakening oil price. So at least in local currency terms in Angola, the government isn't going to be worse off. They don't have to cut spending just when the oil price goes down. They can keep it running at the same sort of level in local currency. And that's what Nigeria now has the flexibility to do. I think it's the better policy to have.
Right, and with the FX market unification, are foreign investors ready to, pack all of that cash into the Nigerian economy?
I was talking to investors just on Tuesday who have brought money in to Nigeria since the currency flexibility has been restored. And these are people who hadn't been investing there for years. So yes, but most investors, the big money, I think, is still saying, we've got inflation over 20%. We've got interest rates closer to 10%. That's not great from our perspective yet. So you need to get interest rates higher. And the same way that America's having to raise interest rates because of inflation, Nigeria too probably has to raise interest rates quite a lot. But when they do, then foreigners come in and lend to the government in Naira. So the foreign exchange risk is all with the foreign investor. It's not with the Nigerian government anymore. In the last few years, it's been borrowing a lot in dollars, the Nigerian government, and the exchange rate risk has been put on the Nigerian people. But once you can start once you can start borrowing in Naira, it takes away a significant risk for the government and Nigeria's people.
And the president did, indicate that in his speech that the interest rate right now is too high. So that kind of means he might be, looking at reducing interest rates, going forward. If that happens, what's going to happen to the economy?
I can't see how that would work. That's you've done this. Policy change has been great in terms of saying we now have a currency level that is realistic. In fact, I think it's a bit cheap. I think the Naira is a little cheap at 750 or something. It should be close to 700 on my model. But that it doesn't work with falling interest rates from here. I agree we want interest rates down in Nigeria, but the way we get there is after inflation's been conquered, after inflation's been brought down. And to do that, you probably need the hard medicine of higher interest rates.
Right. I guess the battle against inflation continues globally at this point. Well, thank you so much, Mr. Charlie Robinson, Head of Macro Strategy, FEM Partners. Great having your perspective today.
Thank you.
All right, let's move on to other stories. Now we see Zambia's inflation rate fell to a 4-month low in June, and as food prices are lower and is set to decline further when the impact of a recent rally in the kwacha seeps through. Adult inflation eased to 9.8% from 9.9% in May. Statistician General Negam Sepa told reporters in Lusaka, the capital, that this is the true picture of the kwacha at this point. Africa's first pandemic-era defaulters currency, which has whipsawed since March, became because of delays in clinching a deal to rework the external loans, has gained almost 13% against the dollar since June 12. After the Statistics Office completed its data collection for the Consumer Price Index. Consumer confidence in South Africa continues to decline. According to the latest survey released today, the second quarter results reveal that the country is grappling with escalating fuel and food prices, as well as higher interest rates, leading to a further drop in consumer sentiment. The Consumer Confidence Index, which is compiled by the Bureau for Economic Research, has reached a reading of minus 25 points. This represents a decline from the previous quarter's score of minus 23 points in 2023. South Africa has been facing challenges such as surging inflationary pressures and frequent power cuts. These outages have caused households relying on backup generators to increase their diesel consumption. And in a recent ruling, the Gauteng High Court in Pretoria has granted a temporary lifeline to more than 178,000 holders of Zimbabwean exemption permits in South Africa. These permits, which were set to expire tomorrow, will now be deemed valid for another year, according to the court's decision. The full bench, composed of 3 judges, sent the matter back to the Minister of Home Affairs for reconsideration. The court emphasized the importance of a fair process that meets all the necessary requirements. During this 12-month period, existing ZEPs will continue to be considered valid, ensuring that holders are entitled to the protections outlined in the Immigration Directive 1 of 2021. Under this directive, ZEP holders cannot be arrested and ordered to leave or detained for deportation purposes in accordance with the Section 34 of the Immigration Act. However, it is essential for ZEP holders to comply with all other entry and departure requirements when entering or leaving South Africa. And that's the show today. Thank you so much for watching. I'm Ladi Williams. Bye for now.